Welcome back, everyone, to another episode of Trade by Numbers. Hope you're having a fantastic day. We had the FOMC meetings. Let's talk about what that meant for the market, see how we held up, and we got a lot to cover. So, as you know, if you hate making money, this isn't the channel for you. If you like making money, if you like learning about stocks, crypto, and investing in general, be sure and hit the like button on your way out for me. And definitely share these videos, get it out to as many people as possible, because I'm on here to help you make money. That's what I'm here for. That's why I do these. I trade stocks and cryptocurrencies for a living. I'm here to help you do the same. So let's get right into it. Fed come out, they announced 75 basis points, exactly what we predicted that they would do. I said I didn't think there was any way they was going to do the 100 basis points. I said this morning that they'd do 75. That's what they'd come out and did. And the market did phenomenal. Let's talk about that. VIX down almost 6%. That's our fear index, people. Down almost 6%. The S&P up 2.54%. The Dow Jones up 1.37%. And the NASDAQ closed at a whopping 4.06%. Now these are huge numbers. I did not anticipate anything like that today, but that's what we got. So where does that leave us for tomorrow? Now we still got the GDP numbers coming out, and as I've been saying, I do believe they're going to come out, say that we're already in a recession, and I think that this will be fantastic for the market. However, my thought was that we'd have a pullback toward the end of the day with the Fed coming out and speaking. Now they come out, they spoke, the market reacted fantastic. However, we have seen this play out in the past where over the next couple of days we kind of tank off. So it's not going to surprise me if we see a pullback tomorrow, especially if they come out and give those recession numbers and it shows that we're in a recession. Market may react, may tank. Could be a lot of people out there fearful. However, I do think it's the best thing for the market, because the smart money knows that if we're already in a recession and those numbers show that it means that we could be climbing out and starting to achieve that next little leg of the bull market. And that's what I'm expecting to see. So let's talk about some of the stocks we talked about this morning. Now we touched on IMPP. I gave you my ranges this morning of where I thought it would go. I really was looking for it to hit that 48 cent mark, and I thought that 48 cent line would hold. However, no. We broke down. We got to about 49 cents. I was looking to maybe take a position at about 48.5 cents, but what happened? We went straight from 49 down to about 45 cents. So I put my brakes on, held out to see how the day closed. We end up closing at 44 cents. So that puts us back in that 42 to 48 cent range. And that's how I'm going to be playing it. So if you're out there looking for IMPP, you're wanting to know how to play it, I'm going to be playing it in that 42 to 48 cent range. So I'm going to want to see it pull back under that 44 and drop closer to 42 before I go taking a position. Now again, it's a short squeeze candidate, so it could be 60 cents tomorrow. I don't have a crystal ball, but that's how I'm going to play it. I have to play it. I got to look at the technicals. The numbers have to make sense. We don't FOMO in around here, so try to hold off. Wait for those numbers to push down closer to 42. That's what I'm going to be doing. Let's talk about our other plays, because we had a fantastic day in those plays. To start with, NVIDIA. We took and got out of NVIDIA, just made $1 a share profit, but bought back in yesterday at $165. Put a trailing stop loss on as we started to come up today, and we ended up closing at just under $178. Now that is a huge gain, nearly $12 up a share on NVIDIA, and I'm still holding those shares because I still think, even though my price target was 72, we busted above that. Lots of volume. So I'm holding. Now I do have a stop loss on it. If it starts to pull back, I will get kicked out of that position. However, at this point in time, we are up over $12 a share in profit, and I'm ecstatic about NVIDIA. Now, the other stock I want to talk about is Signature Bank, ticker symbol SBNY. We bought it yesterday evening. I put it on everyone's radar on yesterday afternoon show. We talked about it again this morning at $175. That stock is already up over $180. Same thing, still holding it. Got a stop loss on it because I'm curious. I really think going into next week that we're going to have a rally in the market. So I'm going to hold on to some of these positions because I believe there's a lot of gains to be made. So I got a stop loss in case it does start to pull back. Otherwise, I'm going to let it run and give it as much rope as I can to see how far it will go. But that's how I'm playing Signature. Walmart. Talked about Walmart this morning. Ticker symbol WMT. Now Walmart was down. Bought that at $122 this morning. And it closed at $126.59. Nice little gain on that. Same thing. Got a stop loss on it. If it was to pull back down around 125, it'll kick me out. I'll take that $3 profit. Be a nice little return on my investment. Otherwise, I'm really wanting to see Walmart get back up to around that 130 mark. So that's what I'm looking for out of Walmart. Now let's get to, we talked about this one yesterday afternoon and this morning, and that is Coinbase, ticker symbol COIN. Now I love Coinbase. As I've said, I use it. Got beat up yesterday, down 21%, because of the news that the SEC may be investigating Coinbase, saying that they were allowing Americans to buy crypto that was considered securities. Now, I said that I was interested in it, went ahead and took a piece of it at $53. I said I was interested in taking a full position if it dropped on down to around $52. I said between 48 and 52 I would be loading up on that stock. And I said that even though it was potentially a little more risky, and that if you didn't want that risk, I completely understood, but I wasn't concerned about it. Now, the reason I'm not concerned about it is that I use Coinbase all the time, and Coinbase, kind of annoyingly, don't have a lot of the crypto projects that I want to invest in. I have to go to other platforms in order to invest in them because they're very picky about what cryptos that they sell on their exchange. And I just don't believe that they have been selling anything. Out of everything listed on Coinbase, I don't think there could be an argument made that anything they're selling is a security. I simply think it's the SEC overreaching, and that is by far my opinion on it. I think they're just trying to make something out of nothing. I think it'll blow over. I don't think anything will come of it, and that's how I'm playing it. I'm definitely still holding these stocks because I see them, especially with Bitcoin continuing to run up. This could easily get in the $60, $65 range. You know, same thing. Always, when you're up in profit, put a stop loss or a trailing stop loss. That way, if it does change directions, you lock in your profits. Always, always recommend that. But let me know what you think in the comments below. Do you think the SEC is out there protecting the individual investor like they're supposed to? Or do you believe that the SEC is just out there protecting more of the elite? Because I don't think that they're out there doing their job. And I don't like to throw people under the bus on this channel. It's easy. Anyone can talk bad about somebody. I don't like to do that. However, my argument is if the SEC was out there actually protecting the individual investor, we wouldn't have the dark pools going on. The market would be allowed to actually function through supply and demand. Prices would fluctuate accordingly. And I think it would be a much better market without that. You know, the SEC says that if you want to invest in certain things, you have to be an accredited investor, which means if you don't make $250,000 a year or have $100,000 sitting in the bank to put on this investment, or have at least $1 million portfolio, you can't invest in it. Now, it took me years to build up to be an accredited investor, and I knew just as much back then as I know now, or at least pretty close. More than enough. I don't need the SEC coming in and telling me that I don't know enough about what to do with my own money that I shouldn't be allowed to do it. And that's kind of my problem I have with the SEC. Like I said, leave it in the comments below if you think the SEC is a good thing, if you think the SEC is doing their job to protect the little man. I'd love to know what you have to think about it. I want to give another shout out to BitBoy Crypto. Ben over there, they're actually sponsoring a bill. The bill is SJR16, and that bill actually would change how accredited investors viewed. You wouldn't be held to the standards that you are now. It would be a free class that you could take online to prove that you have the financial IQ to be able to go out and invest, and you would be an accredited investor. I absolutely love that, Ben. So definitely, if you're not subscribed to BitBoy Crypto, you ought to go check him out. He does a lot of great content over there. And that is all I've got for you. Be sure you're back here in the morning. We're going to cover how the markets, how I see them going. We'll have the GDP numbers out by the time I do my video. We'll talk about that a little bit. I'll give you my picks, and we'll make some money together. So remember, till then, be blessed. Never trade with your emotions. Always trade by the numbers.